Hello and welcome to the FF News Virtual Arena. I'm your host, Doug McKenzie, and on today's session, we're going to be looking at about how a credit union can find their community online and looking at digital as a strategic advantage for credit unions. And without further ado, joining me here today, I have three guests who are right at the heart of that discussion. I've got Matthew Williamson, the Global VP of Financial Services over at Mobiquity. Matthew, how are you doing here today?
I'm very well, thank you. Happy New Year to yourself and everyone else today.
Happy New Year. It's actually, for our audience, our first recording of the year. So I'm very proud to be kicking things off with you guys. But Matthew, I know you've been on the Virtual Arena beforehand, but can you kind of give our audience a bit of breakdown to yourself and Mobiquity, please?
Absolutely. So Mobiquity is a digital experience consultancy where we build outcomes and journeys for healthcare customers, retail, and also financial services, which is the development that I run. And that consists of fintech, banking, insurance, etc. So a lot of the work that we do is actually scanning the market, making sure we understand where the market is moving and where the consumers are moving, and then applying that to real outcomes whereby the outcome for the customer is based on where they're going to be and not the tech around it. The tech is the second layer. So it's all about experience and human centricity and removing friction.
I think that's so topical, especially in this industry. It's really moving in that pace. So Matthew, thank you so much for joining us here again today. And also we have another Virtual Arena veteran in Ruby Wallia, who's the Senior Advisor of Digital Banking, also at Mobiquity. Ruby, how are you doing here today too?
Good morning and Happy New Year to everyone. I'm Ruby Wallia. I'm a Senior Advisor with Mobiquity. I've led digital and technology teams in a number of Fortune 500 companies for years, and now a special advisor, or senior advisor, I should say, with Mobiquity. And really looking forward to this conversation on a snowy day in New York City. I think this is going to be a great conversation about something I'm really passionate about. So I'm excited to be here.
Well, Ruby, it's an absolute honor to have you on the show again. Thank you so much for joining us here today. Also, we have Cyrus Taheri from Mambu. Cyrus, thank you for joining us here today on the Virtual Arena. Could you tell our audience a bit about yourself, your role at Mambu, and even Mambu themselves, please?
Absolutely. So thank you for having me and Happy New Year to all. Yes, so I been in the banking industry for about, 17 years or so. I started my career in consulting and in a variety of industries, but then I moved into Mambu early last year. Mambu is a global fintech platform, we call, and what we do is we deliver a SaaS, cloud-first, API-first, banking platform for anyone who wants to basically take their technology to the next level and offer banking-like services. So it's offered not just for banks, but any institution that wants to just activate that kind of offering.
Yeah, now that's going to be so critical. As we've also heard from Matthew as well, we're starting to see a lot of these institutions moving into offering various different services and having that experience right at the forefront of their minds. And I think that's such an important thing to kick off with. And Matthew, if I know I started off with you, but I'm going to kick off with you again with our opening salvo. And we often think of the challenges a credit union faces in digitization, but what would you say the biggest opportunities that come out of those challenges?
But being realistic, I think credit unions have always had a really strong customer relationship. We talk about know your customer, not just in the regulatory sense, but in the actual understanding your customer's needs, wants, desires, where they're going to move. So they already have that relationship. Today's world is more about moving that from the physical to the digital and almost augmenting that relationship and moving it forward. So if we consider the fact that credit unions are often specifically tied to states, they're not coast to coast providers of financial services. Digital would enable a credit union potentially to expand its scope and offer services to customers outside of their traditional network as well. So there's a lot of elements. There's more access to digital products as well at a lower cost point, which again, they can replay onto their customers. So I think we can take a lot of the parallels from traditional retail banking and map that appropriately to the credit union style customer.
It's almost like a microcosm there where you can, as you said, take those, those examples that we've seen, those lessons to be learned, and just apply them again in a brilliant and forward-thinking fashion. And Cyrus, I'm also really intrigued to get your perspective here. If, can you chime in? Was Matthew correct in his appraisal there?
Sure. So I totally agree. So I think that's one of the maybe advantages of a credit union today. They do have strong relationship, understand their customers. They're also very purpose-driven, meaning they all have similar interests, and those interests transcend geospace. So when you go out and are able to take that offering out into a broader, bigger market, then you could be able to capture more and actually bring those customers in. So I think I absolutely agree with what everything was said before.
Yeah. Now, with that in mind, then, do you think, one thing you think of when it comes to capturing new customers, it's enhancing your offering and bringing in various different partnerships. You see, especially that with the neobanks in the UK, it's leveraging partnerships to be able to offer up new services all the time. So, Ruby, do you think that partnerships will start to become commonplace within credit unions as well as they venture into the digital age?
I think it has to, Doug, because credit unions tend to be bounded. As Cyrus alluded to, their customers all have a common bond, and credit unions are focused on serving their communities that have that common bond. But as customers move from one geographic area to another, their ability to serve that customer sometimes drops. And so an area where they could easily collaborate is where one credit union hands off a customer to another credit union, and there could even be a commercial handshake in that. So you see credit unions already collaborating when it comes to back-end services. They'll often collaborate to have common core banking systems or other platforms that they share. So I think it's a logical extension to say, okay, if we're already collaborating on the back end, why wouldn't we collaborate on the front end? Banks have historically collaborated and shared their ATMs. And so is it that much of an extension to say that we'll also share some of our branch services?
Wow. Yeah, I mean, that's such an exciting way to view partnerships, where effectively it's just a platform and we can seamlessly interact with all of them. I love that idea. And Cyrus, I'm coming back to you again on the tail end of that question. But I mean, I think getting Mambu's perspectives when it comes to partnerships and offering up that back end support to enable the front end, I'm really interested to get your perspective as well, please.
Yes, so that's my world, right, as head of partnerships. And one that we actually take very seriously, Mambu. To the example, Ruby mentioned these credit unions starting to interact and collaborate with each other. In Canada, one of our largest customers today is League Data, and League Data are actually offering the aggregation, the technology management, the managed service for 46 different credit unions. Those 46 credit unions are going to be jumping on the Mambu platform as we speak, and they're going to be sharing, some of that tech, allowing for economies of scale and so forth. But that's not just the back office. There is going to be also some from office operations that you want to keep as more generic, and then maybe you want to keep some others to differentiate that you want to add on top. So we see different flavors of that as you go through. And again, we also see that a lot of the front end or the engagement part of the offerings, yes, there is a lot of options and a lot of ways to construct those ecosystems, but those tend to be constrained by the back office. So you need to be able to articulate both and manage both carefully. And so that's where Mambu can help, right? Mambu is more on the back office, helping, enabling and opening that data, opening that product factory, but then you can then create around with your ecosystem. So absolutely agree with what Ruby said, 100%.
Absolutely amazing. And just in case, we haven't covered untreaded ground as well, Matthew, if I could get your perspective as well as looking at those ecosystems as a whole for credit unions, do you agree with that, with the other two chaps, and seeing that really becoming this omni-channel type of complete freedom of movement when it comes to the technology as well as the experience?
Absolutely. I know it's not the most provocative way of discussing this, conflicting attitudes, but the reality is the ecosystem of collaboration is going to be key. We've seen it in various regions around the world, across retail, commercial banking. So it's a lesson learned that the credit union groups could take and cherry pick the best collaborative partnerships from key players, and as Ruby alluded to, and Cyrus as well, and really drill down and manage those efficiently and get the best value for their customer. I think that's the key point we need to always reflect back to. It's not the best relationship for the credit union or the bank or the supplier, it's for the customer, and then therefore the credit union gain from that. So we'll see more and more as time goes on, the growth and acquisition of clients, I think, through ecosystems and collaterals and platforms. Collaboration is going to be key, but I think I'm going to allude to some in a bit more, but we're going to see opportunities cross-industry and cross-vertical, where you'll see suddenly more opportunity coming along, and therefore more revenue opportunity for the credit union suite.
Absolutely exciting. I always love that kind of cross-play element that finance can provide, because it is so ubiquitous and in everything a customer does. Now, with that in mind, then Matthew's kind of laid down this customer drive to the push to achieve technological, strategic, and even cultural excellence when it comes to digitizing credit unions. Ruby, do you think there are other drivers beyond the customer that are also impinging on the credit unions to start digitizing too?
Yeah, so credit unions have faced this challenge for a long time, right? So their strength, as Matt noted earlier, is around the connection that the credit unions have with their customers. But all of us, all customers, whether they're consumers or businesses, have been going through this transition in our lives where things are becoming increasingly digital. And so while the traditional credit union customer loves the personalized service that they get from their credit union, they're sort of looking at the digital capabilities that, let's face it, the bigger banks with their greater funding pools have been first to offer. And so they're sort of attracted by some of that. And so the challenge for credit unions in general is, how do they provide those same kinds of digital capabilities that are so attractive to customers while retaining that connection that they have, that emotional bond with their customers? And so, yes, I think the pandemic has certainly accelerated the attraction of digital capabilities to customers.
Yeah.
And so credit unions are at an inflection point, I think, more than ever today, where they have to adopt digital capabilities and offer them to their customers to be able to retain their customers.
Interesting. Yeah, it's not even just at the beginning we were talking about gaining customers, but even just keeping hold of them, customer attention, it's now gotten to that critical point. And I mean, yeah, following on from that, Matthew, do you think is it optional for maybe, I mean, you've got 50 markets in the States alone when it comes to credit unions. Is it maybe a kind of state-by-state basis, or have we really reached critical mass on this?
I think it's critical mass, and I've written down these notes, so excuse me while I look down. The figures are staggering. So if we take an industry vertical of agriculture, which has traditionally been supported by a state-derived credit union. So I did some research and found the number one agricultural provider in the US is California as a state. The revenues or total value of products sold is $42.6 billion. Okay. The lowest, number 58, is Alaska with 58 million in total. So the numbers, if you add up all the 58 states, the numbers are staggering. If you factor in then there are 21 million direct and indirect employees employed within the agricultural and food services business. Okay. That market has already started to digitalize, industrialize, etc. So the credit unions need to support that. And if you go back to the things we talked about earlier about cross-state interaction and collaboration with other credit unions, you're then getting into a multi-billion-dollar industry that you have an entry point, whether it's servicing someone's personal finances, so checking accounts, savings plans, etc., or lending credit facilities for farmers, suppliers, the supply chain within the industry, end to end. And that's not even talking about the existing banks, the big four, etc., that are part of this as well. So it actually opens up credit unions not just to survive, but actually to thrive coast to coast.
Absolutely amazing, and those numbers are seriously significant. And even just at the bottom with Alaska, hearing about those organizations and those industries digitizing, you can't have then those companies being hamstrung by their finances also not digitizing at the same time. So it's interesting that everyone has to work in tandem on this. Now, Cyrus, credit unions have been partnering with fintechs for some time, especially when it comes to payments. We can't be too unfair to the kind of digitization process. But now I'm starting to wonder, what areas do they really need to improve on, and where can they partner with organizations to really start to thrive and improve the customer experience and their finances along the way?
Sure. So yes, I think credit unions have, definitely used payments in to different extents. But I think now I can see a lot of credit unions starting to, care more, look for these onboarding, customer experience, know your customer. But also with that comes the risk management side of it. So you also need to start, as you open up that digital exposure, that digital, platform, you need to protect it as well, right? So there is all these, anti-money laundering and risk management tools you got to think of. Those all can be provided by traditional players, but also by fintechs, because fintechs tend to find those niche. I think so. The experience layer is also, as Matthew mentioned, not just limited anymore to your traditional bankers, which you want to retain and you want to engage, to what Ruby said, trying to keep that bond, trying to keep that relationship and not make it generic. On the other hand, you want to attune to those interest levels that those members have, and those interest levels can be, enhanced by fintechs or different ecosystem providers that can then add value-added services, insurances, access to other type of, real estate, whatever it is, that you can then bundle in and bring in as part of your kind of offering. So I think there is tons of opportunity for one side credit unions think beyond their traditional and actually enrich that member, let's say experience, but also, it comes with, an opportunity for the fintechs to then understand the credit unions a little bit better and be able to attune that and tailor, some of the offerings for those type of, kind of market strategies.
Yeah. Now, speaking of those strategies, Ruby, how would an organization like Mobiquity, Mambu, for instance, as well, I'm interested in what the ground level play is to start this transformation, when it almost seems quite a full-fledged transformation across every aspect of these organizations.
Yeah, I think all credit unions have slight differences. And so a good, thoughtful approach would be partnering with a credit union to understand what their common bond is, to understand what their mission is, and then help them select the capabilities that would resonate most with their members or customers, and bring those to life for them, right? So credit unions typically, well, some of them larger, and when they collaborate with a service organization to share resources, they're more able to do this. But the vast majority of the 5,000-ish credit unions in the US have smaller technology teams. And so they really can benefit tremendously from an organization coming in and helping them understand, here's the landscape of capabilities that are available. Now, the fintech space is rich with capabilities, right? And so the big banks have increasingly viewed the fintech landscape as a shopping mall for capabilities that someone else has developed that they can license, right? So it's almost like a low-cost R&D capability. And community banks and credit unions, being smaller organizations, haven't really participated as much in that capability of being able to leverage fintech developed capabilities, license those, embed them in their products, and make them available to their customers. And so I think this is a space where we can really help them, partner with them to understand what their strategy is and what capabilities would really work for their customers, and then B, help select the right fintech partners that would work for that particular organization, and then actually even help them with the implementation.
Interesting. And Cyrus, can I also get Mambu's perspective on that as well, please?
So 100%, I love the way that, Ruby articulated the shopping mall analogy, because I think it's really accurate. So Mambu, as part of the shopping mall, has maybe a couple of stores in there, right? And what we would do is we are offering very strong banking capabilities, right? And as part of that, what we're going to do is our mission is to open that platform, open that data, allowing the flexibility, to really be able to then plug and play and create the experiences that you need by using what we call a composable architecture. And so I believe that, yes, Mambu's view is all about coexisting with what you have today. So we don't want to come in and just replace everything. That could be very disruptive, and especially for a credit union, not really what I see happening on a regular basis, but instead finding those places where you can then starting to create a new line of business, starting to open a new business, etc. And so I think that's Mambu's mission here, is more about the opening of the platform, providing some really narrow set of capabilities, and then allowing for then the options and the capabilities to come in as needed from that shopping mall, as Ruby mentioned.
Yeah, no, it has to be an evolution at this point. It really does scream that this is not something that you do once and it's done. Now we're getting to the point of innovation, and customer demands are also equally fueling that constant change. Now, Matthew, both Cyrus and Ruby brought up this very interesting point that credit unions are in the point where you want to evolve and you want to adapt, but also have to retain that community spirit, that community bank feel, and cater to their customers. But that comes all the way onto the back end. So how does adopting advanced technology systems, reshape the branding, the environment, but also the overall corporate culture on the back end? And I'd love to hear Mobiquity's point to that as well as yours.
Yeah, it starts off quite simplistically, which is always at the root of something being ingenious and innovative, in that you've got to stop getting confused, excited, and overwhelmed by tech.
Yeah.
Because if you base everything on tech, as in, our competitors are doing X, therefore we should do it, that's not the answer. The way you maintain your corporate identity in this example is, do you know who your customer is? Where is your customer going? Is the customer's centricity part of your DNA as an organization? If that's the case, then the rest follows from there. It's not about tech, it's about where they are, what they need to achieve, how could you help them achieve it, and then you apply the technology around that and the partnerships and the ecosystem to create that outcome. And obviously, as we know, things are moving forward and technology is ever advancing. Meta, obviously, is the huge thing. I think Meta is the big thing of 2022. And that could seem a really scary thing for anyone, especially a credit union that's just taken its tentative step into digitalization. But let's just step back from wearing Oculus and wandering around and picking things off a virtual supermarket, as Ruby suggested. But imagine a farmer who can use their phone or their device and have an augmented reality through an app with the bank or a partner and the bank that reviews the crop. So it picks up the geolocation of where the person is, the humidity, the temperature range for the next 3 months, the life cycle of the crop, and analyzes the images of the crop and determines its health based on that. The bank could then use that data to create a collateral for the user, the farmer in this example, to buy new harvesting equipment, or hire more people to bring in the crop, or buy more fields, more land to expand and grow. So if you strip the tech away, although I just reference tech, but talk about the outcome, the journey of the customer and the things they need to achieve, and then you put a tech wrapper around that, suddenly it's not so scary. It makes a lot of sense. We don't know exactly how we'll get to that end destination, but we're not that far from it in reality, just based on the tech we already have.
Yeah. And that leads perfectly on to my next question, actually, Matthew, because you've got to trust in technology, but you've also got to evolve and adapt, not for the sake of it, but when innovation needs it and when your customers need it. And one thing that community banks and credit unions have really had such a strong currency in is trust. And Ruby, I'm really interested to see if you believe that trust is very much the currency of the future. And if so, how can trust be conveyed to consumers when you're no longer meeting with the same banker every day? You're actually just interacting with an application.
Yeah, I think Doug, trust is the foundation of being able to provide financial services. Trust is a word that that traditional banks have used for decades, centuries as a foundation, actually, for their relationship with their customers. And we've seen in the digital landscape, social media companies that played fast and loose with their trust suffered financially and otherwise.
Yeah.
And so financial services organizations are very mindful of that and will do what it takes to maintain that trust. And when it comes to trust, it's such a fundamental thing, and it's the way that you maintain it is by being transparent, by being open about how you're using people's data, because that is actually how you enable a lot of these capabilities that even Matt was talking about in the farmer example. Yeah. It's all about data. And so when you've got that much data, and the metaverse is going to enable more and more data being accessible and usable, then the trust factor becomes even more important. And so if organizations are transparent about what data they're collecting, how they're using it, and making it clear that they're using it for the customer's benefit, not just for their own benefit, then the customer feels good about the relationship with the bank. And the reality is that these digital interactions can actually be just as emotionally satisfying as physical interactions when it comes to banks and their customers. The ability to know a customer's context, where they are, what they're doing, what services they need, and then being able to offer them those services remotely is fantastic. It's like having a banker follow you around, enabling all these real world experiences, because the data and the compute capabilities in the cloud enable that, right? So, so I think actually the coming digital transformation, I mean, we're already in the thick of it, but there's more to come. Certainly the metaverse, as it starts to materialize, will actually enable all of this. And it raises the bar and on the expectations of what financial services will have to do to maintain that trust.
Yeah. And I think you've hit the nail on the head there. You know, you can have those digital experiences that are so important. And I could be incredibly wrong with this, but I imagine to follow Matthew's example or anecdote, I imagine an Alaskan farmer doesn't want to drive several miles to their community bank. They'd rather just bank there and then and know the answers and everything that they need to there. So I think you're right, and I think that's a really exciting way to look at it in the future. But following on from the amount of data that customers are now providing their banks, and the fact that banks are now partnering with so many different organizations, it's really interesting to see where that trust is going to lie. So Cyrus, I've got to come to you again, all about the partnerships, and see now that we are seeing these community banks trepidatiously starting out in this partnership scheme and looking at interacting with other organizations to provide that awesome service. Where does that trust lie, and can you tell us a bit more about where that falls, please?
Sure. Just to add a little bit before I answer,
please,
to add a little bit on what Ruby added. I think that as you get into the trust part of it, yes, there is the part of being responsible with data and to have high. You're going to be in higher standards and so forth, right? But also it creates an opportunity as you move digital into that. Before, I had to wait until somebody walked into my branch for me to even interact with that individual. Yeah. But now you're opening a line in many different parts of that journey, right? So you'll be able to be relevant and also tactful, careful, right? As you engage in different parts of that journey. But it gives you that opportunity to engage in many different ways that you were, maybe constrained before to the physical world. And I think that's part of the trust aspect in how you create that interaction in a frequent and valuable basis that allows you to kind of maintain that trust through the journey. Now, to answer your question too, on terms of the the partnerships and playing a role, right? I think everyone then becomes responsible. Everyone else needs to play in the same standards, right? We as a fintech are also being held at the highest standards as we need to operate with all these institutions. And we also carry data in our platforms, and so are others. And we have to treat it, as our data. And we need to make sure that he's complying and he has, all the R&D and everything that goes into that. So I think trust is extended beyond the walls of the institution into the partners. The partners needs to be, evaluated and also held under those standards. But also then the reverse of that is, if you're able to find the ecosystem that you trust and that's really going to add the value, then you'll be able to then create those touch points and that really high value interaction with your customers.
That's absolutely brilliant. It's excellent to hear that this can be facilitated digitally, but also the ceiling is so much higher now as to what experience you can provide. That we're just touching it, and we're going to find out so much more going into the future as everyone becomes more digitally savvy. So that's very exciting. And Matthew, I guess it's up to you really to kind of wrap things up. I know we've heard from the other two, but it's such an important role in this conversation, and it is that trust part. And do you agree with the previous two that maybe there's still more to be discussed on it?
Absolutely. I think Ruby referenced it, and so Cyrus, around it. Traditional foundations of banking were based on trust in the days of cash, and we will keep it secure, we will offer you services, etc. But today, trust is about, do you have my best interest at heart? Not, do you just hold my funds for me and give me access to them? I think that's where the real value will come. And I think we'll see banks and credit unions and others fall away or be consumed, whereby they're not perceived to be trustworthy. And what we mean by trust is, people can make mistakes, banks, and we're all fallible. We make mistakes. It's about how you manage that afterwards. Are you transparent in what you're doing? Are you transparent with the customer on what you're doing with their data and how you're enabling and helping them? I'd recommend to anyone in this sphere, there's a book that came out last year, and I'll just read it out, called Banks and Fintech on Platform Economies. And it talks around contextual and conscious banking. It's by a great author called Paolo Cironi. And I would recommend that as a read, because it breaks all of this down end to end around contextual banking for a client and conscious banking as well. But trust is always going to be the key. And it comes back to the theme we started at the very beginning, which the tech is not really relevant. The pace of change is relevant to a point, but it's actually about, do you understand your customer? Are you customer centric in what you're trying to do and what you're trying to achieve? And then from there, are you removing friction and then making sure that you are delivering your customers' requirements and outcomes, and putting the tech around that as a wrapper to wow and excite your customers, not just say, here you can access your balance.
This is such a brilliant way to end the conversation, because it really does kind of wrap it up in the fact that you need to look at this whole movement, this whole change in I hate to use the phrase, holistic way. It can't just be technology for technology's sake. It has to be born out of an experience sake. So guys, I just want to say a massive thank you. We've come to time, but it's been so insightful hearing all your thoughts on the topic. And I definitely have to check out Paolo's book. Matthew, thank you very much for the recommendation. But also a massive thank you to our viewers. You can catch the rest of the series and much more over at ffnews.com, of course YouTube, but obviously especially LinkedIn, where you'll see me in the comments. So once again, Matthew, Cyrus and Ruby, thank you so much for your time. It's been an absolute pleasure. I hope you have a lovely rest of your day.